All right, welcome to our meeting. We'll get started officially in about a minute. We'll wait for a few more people to join. Okay, so this is our first FinTech Specialization meetup podcast. We have today me, Professor Clark, and Joshua Lau, an alumni from HKUST, who is quite interested in cryptocurrency issues. We'll talk about virtual banking and cryptocurrencies. So when we look at our agenda for today, we're going to talk about a couple of things, but we want to let you know that you can raise your hand by clicking on the hand icon, which is next to the mute or unmute icon. You can mute video, mute voice. We have muted video and voice for you already in advance. If you raise your hand and want to ask a question, we can turn those on. Or you can do by ask a question by text. Okay, next slide. We're going to have a brief introduction, which we're doing now, and we're going to talk about virtual banking in Hong Kong, China, as well as in other parts of the world. Just virtual banking in general and what's happening with that, and then cryptocurrency in general, what's happening with trends in that, and then some discussion, questions, and answers. All right, as we look at the first topic, virtual banking, non-bank financial services, which includes virtual banking as well as other kinds of financial services, have grown rapidly, particularly in China, with Ant Financial becoming one of the world's largest banks, with WeBank growing and becoming one of the fastest growing and early virtual banks in China. So we've had huge growth in general in a variety of financial services, some banks, some not banks, in China. Part of what's enabled that is the fact that government regulations were slow to sort of pick up on this. And people like Alibaba with Alipay or WePay with Tencent were able to move forward very quickly without much government intervention or regulations. In fact, the government sort of took a laissez-faire or hands-off approach, in part because they weren't sure exactly what to do about that. The same has been true early on with cryptocurrencies, as governments mostly said, we're not quite sure what to make of this. And so regulation was relatively minor, which enabled rapid growth and sometimes problems. Recently, Hong Kong's government has issued a virtual banking license. This is one of the first official formal requests for a virtual banking license. This virtual banking license costs quite a bit of money. This is actually a mistake. This is 300 million Hong Kong dollars for a virtual bank. So it's the capital requirements, 300 million Hong Kong dollars. The requirements are similar for a virtual bank license than a traditional bank license. And many institutions look at this $300 million requirement and say, why? Why do I need to pay that? One of the other requirements from the Hong Kong government for this virtual banking license is you have to show a business model why you need a virtual bank. And that's actually harder to meet than a traditional banking license. With a traditional bank, you have some kind of community or special interest or an area, a region, an industry, a sector that you're going to focus on. And so it's not that hard to come up with a reasonable business plan to satisfy the regulator. With a virtual bank, you have to convince the regulator that something they've never seen before is needed and makes sense. And so this has resulted in, with the same capital requirements for a virtual bank as is required for a traditional bank, and greater regulatory burdens, not a lot of applications. We had a reasonable number, but the actual number of applications granted or the approvals granted was fairly low. And many companies looked and said, we don't see why we should do this. We don't see why we need to be a virtual bank when we can do a lot of the things that banks do without being a bank at all. Things like PayPal is not a bank or hasn't been a bank historically. eLoans.com is not a bank. And many financial services providers in e-commerce or in FinTech have not been banks. They've been innovative pioneers that skirted around the banking requirements. In China, the requirements are getting stronger, and the government is starting to stamp down and say, WePay is not a bank. WeBank is a bank. WePay cannot pay money on deposits. WeBank can. And so you see some differentiation. This is a bank. This is not a bank. What is the main difference? You can do a lot of things if you're not a bank, but you can't have a checking account. You can't have payments on demand deposits as a non-bank. This is actually not that big of a problem for many FinTech institutions because, for example, WeBank, for its first several years, didn't need any deposits. Their capital value was so high, their amount of equity was so high, and their degree of funding with partners who were interested in their loan creation potential was enormous. And they didn't really need retail depositors. So they didn't need to be a true bank. They got the license, they got approved, and they are a bank. And they now do take demand deposits. But early in their history, they were basically a creative microfinance type lender, small loans that was very innovative and pioneering. So what we see in many countries, certainly true in Hong Kong and China, is an increased sense of this is what we mean by a non-bank or by a non-branch bank. This is what we're expecting. And the requirements for virtual banking are similar to traditional banking. In the US and the UK, it's the same capital requirements. In Hong Kong, the same capital requirements. In China now, same capital requirements. So we're seeing this shift that a virtual bank is a bank. And it has to meet all the standards of a bank. It just has some flexibility. Even non-virtual banks are now being allowed by the Hong Kong government, for example, to have checking accounts without any verification of address, without any branch checking. Just send your Hong Kong ID, a picture of it over your phone, and open up an account totally online without ever meeting a person. And you can open up a checking account with pioneer innovators like CITIC with no visit to a branch and within about 5 to 10 minutes just with your phone. And so this is intriguing. That's not a virtual bank. It is a branchless bank that's a traditional banking license that's doing virtual banking in addition to its normal banking. So that's kind of the status now. Virtual banks looking very similar in many ways to traditional banks, just having a few more regulatory hurdles of why do you need a virtual banking license? You might ask, why would you even apply for this? And the answer is, in some cases, you want a different brand, you want a different partnership, you want a different institution. It may help you to raise money from the market or do a joint venture or something else. And it's a way of separating the culture of your bank. So Standard Chartered, for example, looking and saying, we want a virtual bank, we want to partner with somebody else, and we want to do something innovative. That opens up a new culture, a new approach, a new process. So that's the status of virtual banking. Let's turn the time to Joshua to talk about what's happening in crypto.